U.S. Treasuries took down.
Listen up, Rebels. Rebel Leader here, and today we're going to do a Friday debriefing. Basically just going to take a quick look at all the major high points of the market this week, just to recap you if you've missed anything and you kind of just want to get quick bites of information. This week was headlined by the emergence or re-emergence of meme stocks. If you know that they're cyclical and these trends will keep on going. Right now we are at the peak of meme stocks, carried by AMC and GME, GameStop, and AMC Entertainment. And because of these two stocks were racing through the roofs of their own stocks, the entire stock market got dragged up with them. And now we're starting to see a return to normalcy. If you guys have lost money in the last 2 months as the market was downtrending, we're normalizing, we're reaching a resistance line, and we've bottomed out already and we're on the uptrend. That's kind of what the entire market is showing, and that's great news actually, because going forward now we can hopefully return to those February highs and keep breaking through the roofs and keep reaching new highs. This week, if I had to say one stock that kind of surprised me, was Facebook is a great buy. I would actually recommend anybody. Currently now it's hovering around $330 a share. It's a great time to buy Facebook shares. And this stock has been dragged down recently, because of all the news and they're going to try to break it up. But I'm telling you, Mark Zuckerberg, who have VR and the Oculus, these guys are not going anywhere. Management here with Facebook. So one, buy shares because they have not jumped as much as some other stocks have recently. And that's very important to know, even in big tech, that Facebook is still severely undervalued. As we see, AMC has actually almost hit $70 a share about a few days ago this week. And again, this was a $10 a share stock 1 to 2 weeks ago. In fact, over this past week alone, it has gained 50%. A 50% gain over the past 5 trading days. If you don't realize how insane that is, it is because of the short sellers, the market manipulation by Wall Street. But these people, and we're going to call them, the Wall Street Bets Army, or now it's kind of like the GameStop gamers. I think what people are realizing now is that anybody can invest. The freedom and the ease of somebody picking up a Robinhood app and just investing and supporting a company like GameStop, and literally the popularity that's and the reach now and the marketability of trying to support small businesses, something like GameStop, and trying just to hold your position, kind of squeeze out the short sellers. And they're losing a lot of money now, Wall Street and all these short sellers. And that's why GameStop just keeps skyrocketing, and it's why it's going to keep on going, because you have people who just keep holding the stock no matter what happens. The stock was at $500 and then it dropped to $40, and people are still holding it because these gamers, all they do is they just play video games all day. They don't really they have the most patience out of everybody in the world. If you've ever played a video game, you need extreme patience to get to the highest level, right? That's what these kind of people are doing now. They're kind of just holding their position in GameStop. They kind of joined now this movement, right? And they're gonna stay with it. You have people like DFV, Roaring Kitty. These people who are kind of the faces of the movement, and they're doubling down their positions. It's really just everything is going well for GameStop. Now I would actually say that it's probably a good time, to buy if you didn't buy a few shares yet. It's going to be really interesting to be in for the ride. Of course, we're hovering around, I believe, last time I checked it was at $240 a share. We could wait for it to dip down. You don't have to. It's kind of just going to be, they're calling it a once, in a lifetime event where this short squeeze is happening. There are other interesting companies that have highly shorted right now, actually, and I'm talking 25 to 30% of their company stock is short floated, and that's Bed Bath & Beyond. You have Beyond Meat. All these good companies. Beyond Meat was a great company, for the past 2 years, and they have so much growth ahead of them. That's an interesting play if you're thinking about entering there. Again, every single stock, most of the stocks in the stock market this week was on the uptrend. It went up, and it's because of these meme stocks, the reemergence of them kind of dragging up the market. And you also will see, going into the next week, that it will probably keep this hype. And as we push into the summer, things start opening up. We're gonna start seeing a lot more runs. So that's why during this entire downturn, you should have been putting money into all of these companies for the past 2 months, even as they were dipping down and reaching some new lows. That's really the best time to buy. Of course, it's always the best time to buy compared to 2 years from now or 3 years from now, because companies generally only grow. There's people, specifically, has 1,000 employees trying to make that company successful, right? And that is why, we invest basically. That was a kind of a quick update. Tattooed Chef has been doing really good as well. That was also part of the short float, and now it went from $15 a share to $22 a share. And again, this is a company that is in my mind, pretty solid. $30 a share company over the next year, and if not more, it can possibly 5 to 10x over the next 5 years, right? And that's kind of the value that you're trying to get. You're trying to grab kind of that mentality of long-term thinking. And if you think long-term, all these companies are major buys. So that's our first Friday debrief. Rebel Leader, over and out.